What's good, YouTube? Welcome back to the channel. In today's video, I'm going to break down one of my favorite setups for continuations. If you know ICT concepts, this should come fairly easy, right? And this strategy is what most of my members use in the Discord, and they've been getting paid, bro. Even one of my members got their first payout, so congrats to him. But yeah, so in today's video, I'm going to show you what I need to see before I enter the trade, how to spot liquidity, how to use market structure for value gaps, retracements, and then how you can apply this every day to make money, right? So without further ado, let's just get into it. There's a couple things that I'm looking for, right? And the first thing that I'm going to be looking for is identifying the trend, okay? We know about trend, highs and lows, right? So is the market trending higher or is the market trending lower? All right. So that's number one, identifying the trend, right? Because if we're bullish, obviously we're not going to be taking shorts because these shorts are probably just retracements to then move higher and fall and continue the trend, right? So we're looking for that continuation following the trend. And then same thing for a downtrend, right? So number two, right? We're looking for a manipulation into a high time frame PD array. And what that means is basically we're coming, if we're in an uptrend right here. Let me get my tool. Yes, if we're in an uptrend right here, let me just say that, bang. So boom, we're in an uptrend. All right, are we coming below 50%, right? So that's the PD array, premium discount, basically, right? If we're in an uptrend, the bottom 50%, right? This bottom half is going to be your discount, and you're looking to buy down here if we're in an uptrend, okay? So we want price to manipulate down here before continuing higher. And then same thing with the downtrend, right? Are we manipulating above 50% into premium to then short? All right, so that is basically equilibrium, right? That's a premium discount. I'm also looking for if we have an SMT or a liquidity sweep, right? For the manipulation, right? So a manipulation is going to be a fake move, right? But we're usually moving to then continue the real move. So in this example, so SMT and liquidity sweeps. So say, right, we come into 50%, right? Did we sweep any lows is what I'm asking, or yeah, is what I'm asking myself and what I'm looking for. Did we sweep any lows? And did we make an SMT, right? Because if we swept any lows, that means like all this sell side liquidity here gets taken, and then we can continue the trend higher. Or say if we put in an SMT with one of these lows, say like something like that, SMT divergence, right? So if we put in an SMT, this is also a confirmation of a reversal. So SMT continuation also too, it can be like a high time frame for value gap. Say this is like a 4 hour, 1 hour for value gap. Did we sweep lows into the fair value gap, right, to then continue higher, right? This is just basic market structure on what you kind of want to see the market do. Coming into premium, you just want to see it manipulate, right? What else is there? We have high time frame rejection blocks, high time frame order blocks, weekly new week or new day opening gaps are like really good too. Say this is like the market, right? And then boom, market closes and then new day opens and we open higher up here, right? Boom, boom. So this is a new day opening gap. Did we come in a new day opening gap and then respect it? You see that it kind of reverses, right? So you're just looking for things inside of the premium or discount. So all of those examples I just did were for an uptrend, right? A bullish bias, but same is the exact same, but just opposite for a bearish bias, right? So third thing I'm looking for is a strong displacement candle, leaving an unfilled fair value gap. So usually when we displace higher, right, we're gonna inverse usually a gap break structure, and then leave an unfilled fair value gap. So this is what it's gonna look like. So boom, we're down, come down to manipulate, and then boom, we get that nice displacement higher, and then we leave a fair value gap. So say there was a fair value gap here, we inversed it and broke structure, right? And now we're looking for a new unfilled fair value gap here. So then price can leave it and then come back and fill it, and then that's where we look to enter, right? So I'm gonna show you on the live market as well what a good example looks like. But after that, you are going to look for retracement into the fair value gap, rejection block, order block, and I'd say the 5 minute or 15 minute like fair value gaps, or just any of these on the higher time frame are best, just because you'll probably get the best move, the bigger move. You can use the 1 minute, but the 5 minute probably gives you the best entry. So this is going to be an example of the bullish continuation. So say this is a high time frame fair value gap. All right, this is like market open here. Let's just get this. Boom. Market open. Ding, ding, ding. Right, we come out and then we sweep this low right at market open. Okay, we sweep this low inside of what? Of a high time frame fair value gap. So I'm like, overall, we're bullish. Okay, we come down, we manipulate. Is this 50% of this range? Low to high of the range? Yes, it's below 50% inside of a high time frame fair value gap. We swept this low. Okay, and then next thing I'm looking for is a displacement higher, right? So we have a fair value gap here that gets inversed. Boom, we end up breaking structure. Shebang. So now we have this unfilled fair value gap here. All right. From there, I'm looking for price to come back down, fill us in, respect it, right? And then I would enter the trade, targeting the high, stop loss here, below the fair value gap or at the low, and then we're looking for price to then move higher, all right? And then same thing, but just opposite for sells. All right, we're looking to see a manipulation higher, sweeping a high, breaking structure to the downside, leaving a fair value gap, filling us in, and then we can enter something like that. All right, so on the live market, let me just show you here. So this is perfect. Like this is on the 15 minute. I was even down on the 1 minute looking at entries, but just looking off the 15 minute, this is a daily fair value gap. So this is a high time frame fair value gap that we are respecting. Okay. So we're looking for price to move higher because overall too, we're bullish, but yes, we had this down move, but it was into a daily. So all this was manipulation into this daily fair value gap to then move higher. Okay. So just looking off the 15 minute, you see we're respecting this daily fair value gap, this daily fair value gap, and then we displace higher, right? There's not really any inverse fair value gaps here on the 5 minute and 1 minute. There probably is, but just based off the 15, we break above this high, and this is our change in the state of delivery or break of structure. All right, and then what do we see? We see this fair value gap, 15-minute fair value gap get filled. Yes, this one kind of gets inversed, but it kind of just slowly makes its way down, respecting this one. All right, and then just purely off this, I would answer it off this, and targeted this high, stop loss below the fair value gap. So this is for a like 1 to 8 R, right? But diving down into the kind of 5 minute time frame here, right? You can kind of see it a little bit in detail where we are respecting this. We get a break here, right? We come down, respect this fair value gap. Boom, we break here on the 15 minute. This is that 15-minute retracement into the fair value gap, right? And then you could enter there. Stop loss at this low. I'd say stop loss at this low, or you can put it below this fair value gap, because if price decides to inverse this fair value gap and then break below this low and then inverse this fair value gap, then we're just wrong. We just want to be out the trade, but we would look for price, or we would want price to just, hold this, respect that, and take out the highs. All right, and then even diving in on the 2 minute, um, you can just see it a little better as well. And you can see just order flow is very bullish, right? Order flow is very bullish. We don't want to be bearish anymore after coming out of this gap. We do get inverse fair value gaps on here, right? You can see just this nice strong move higher, and then we get the retracement into this 5 minute gap, right? So entries could have been here, respecting this 5 minute, targeting this high. I feel, yeah, this entry is a little too late. It gets a little too slow, but like realistically, you would be on the 5 minute, 2 minute, right? And then taking entries off like the 5 minute fair value gap. Boom, targeting that high, right? To continue higher, okay? One last thing I want to talk about is just things to avoid. And yeah, pretty self-explanatory, right? Going against the trend, because they're just less probable. So following the trend is always your friend. All right, don't get FOMO. Don't, because with FOMO, you're going to buy high, and then you're not going to want to be in the position that you're in because your entry's so high. So wait for a price to come below 50%. Don't over leverage, right? Different days are going to be different volatility, right? You're gonna have different volume every day. So some days you might need to size down. Some days you can size up if the market's a little slower, right? And then just be patient, bro. Don't be impatient. Let let the setup come to you, right? Let it come to you, and then you take the entry. But besides that, man, that's pretty much it. Deuces.